Hey everyone, and welcome to the Bricks, Bucks, and Bytes podcast, your weekly dive into funding, market, and investor news in architecture, engineering, construction, and supply chain. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
We will ask you why you wear a black shirt, not even a t-shirt today.
Are you wearing a shirt?
I've been black collar and everything.
Yeah,
Wow.
I've been
You're changing, Owen. Come back.
I've been on a hot date actually.
Hot day.
Yeah.
Maybe Martin, your partner in crime here, is giving you some signals that he's, leveling up. And...
Yeah, and I'm still having a mess behind my back.
It's disgraceful. It gets messier and messier.
All right, focus on yourself.
Okay. So we were chatting just off air for some time, and we decided that today we would cover Reneo, and I think the news came out perhaps last week on this one, February 20th. Is that right? And this is a company, for disclosure, that Patric, you are invested in. So shall we dive in? Because this is a mammoth round as far as we can see. I mean, the number's big. 600 million euros.
Not all of it equity. We'll dive into that.
Yes.
Okay. So what do? They are Hamburg-based real estate technology and investment platform. So they are trying to make the buildings greener. I guess existing real estate has nothing to do with the construction, I guess. Maybe they're picking up some data from construction data. I don't know, Patrick, you can maybe explain if there is some component to this. But yeah, I think they are trying to make the real estate greener. So
residential real estate. So I'm guessing this is like multi-family, like, do you call them towers in Germany?
We don't really have that many tall buildings that are worthy of being called a tower. So yeah, but it's like multi-story, multi-family.
Mm-hmm. Okay. So what's in there?
Okay. You've I think painted the exact right space. So Reneo sits in a space where they are targeting relatively energy inefficient, so low energy grade by EPC standards, buildings, and has two offerings. The first one is acquire single apartment units in multifamily homes and transform them both cosmetically, visually, as well as energetically, and then either hold and operate it for the investor or sell it. That's the first. And the second product is actually on a bigger scale, buying the entire multifamily home, the multifamily unit, and transforming all of it, including building hull, including envelope, windows, can even be, if it makes sense, the primary heat primary heat source, etc. But depending on what makes sense in each specific case. And so Reneo has a couple very unique characteristics and convictions to it. The first one is it's a company that the founders from day one felt like will only succeed if it massively standardizes all the processes as well as the transformation packages that you should do. Through that standardization, they did something that I call demand shaping. So they are able to actually bundle and concentrate the demand for certain types of building materials, energetic units, etc., and radically standardize that, and thus access a better supply network. Because now you can also concentrate demand on that supply network. There's some elements of cloud manufacturing here if you pay attention, right? Though I wouldn't call it a cloud manufacturer, just speaking of the elements. So that's one, radical standardization. And two is they have built relatively sophisticated technology in order to assess the ideal target units, buildings or single apartments, for the transformation. So basically picking at the right price in the right location, evaluating what packages from the standardized transformation make sense. So that's the second piece. And the third piece is they have built an execution machine. So they have built a very good network of partners, not a liquid marketplace, a very concentrated network of partners that with these standardized processes and against these technologically assessed business cases is implementing that. And then in the second business line with the multifamily homes, again, Reneo would hold the asset for the institutional investors. And that's what this round was for. So in total, Reneo has raised 45 million in equity over its lifetime, not just in this round. We invested in 2022, for example, as well as about 600 million in debt from investors such as Goldman, as well as Peakside. So obviously that's an important stamp for a company like this to access high quality debt. And, I'm quite happy with that.
Yeah, very interesting, actually, because I didn't know so much of what you said. So how do they differ from traditional real estate investment firm that is buying existing assets and doing them up, and traditional real estate investor or investment firm would do it up to minimum standards that they need to just to comply with, I don't know what is in Germany, but building regs here in the UK, for example. And then they would lease it or sell them for a profit. I guess their component here is that they would make them very green, these buildings. Mm-hmm. So, which will be more expensive than traditional, typical real estate investor who just buys it, does the minimum and lease it or rent it. Unless you have to invest into greener properties, less than like an investor, right?
That's one. And two, if you actually think about this business from a execution standpoint first, a supply and process standpoint first, which is what Alex and Lennart have done from day one. So they saw themselves and the opportunity as one where, hey, if you approach this from a real estate investor mindset, then your business is about financial engineering, finding the asset feasibility and all of that. But in the end, someone still has to tell you how to transform the asset and how to execute it. And that's where the business case breaks down. And that's exactly where Reneo started. They came with the end in mind. So they built the whole standardization, the technology for standardization, the processes, the supply network. And with those, they pick the assets that actually fit those packages to be implemented. And then they have the entire supply network to actually execute that. Germany-wide in this case. And then, of course, there could be an opportunity here Europe-wide, but they are starting with the end in mind, and that's where they standardize and fix the supply first.
Interesting. So this is on the promise that European Union will have implement some more stringent rules around existing buildings. Yeah?
Yeah, the taxonomy. That's exactly right.
Yeah, okay.
So did they sorry if you already mentioned this, but perhaps I missed it, Patric. Do they purchase the asset too?
Yeah, through, but that is something. So you have the equity part of the company where the technology sits, the team, etc., and then you have the debt part of the company where the assets are being owned on behalf of the debt providers.
So they purchase the asset, install the retrofit measures to bring it up to perhaps even above what the regulations require. And then do they operate the asset from there?
Yes, for some of these business lines, they would.
Mm-hmm. Okay.
Yeah. For a maximum holding period. I think that one, let me not share it, but, it's not indefinite.
Mm-hmm. Mm-hmm. Makes sense. Why did you invest?
Hey, listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
First of all, that space back in 2022 and even still today, to me, looks dynamic. It's a space that has a very homogeneous market that I can attack with homogeneous means. So the channel is very similar. The types of assets that I can attack is fairly deep in a similar way. And I think it follows just fundamentally, even if you take away regulation taxonomy, an irreversible mega shift. Because, Martin, to your point, you could now easily say, yeah, but if the EU becomes less bureaucratic, which by the way,
Not happening.
Maybe they don't need this anymore. That's not the point. The point is you need your buildings to consume less energy because Europe does not have a lot of prime energy. So you still will have to do this, and you will still have an economic case for something like this. One. Two, they had very unique convictions and insights. And one of them I had just mentioned, starting with the standardization and more of the cloud manufacturing mindset than an investment or real estate prop tech type mindset, which is why I got involved. You know, we're a construction tech fund, and we do renovation because it's project based, and that's where we, you know, feel at home. That's how I look at this business. And three, the founders. So Lennart and Alex are two of the founding team members of a German fintech called Creditech, which now probably 10 or 11 years ago was one of the earliest, very well funded and for a time very successful fintechs. And so these two are from a both technology as well as just execution, operational excellence perspective. They operate in a high echelon of founders.
But there's a good theme for today, right? They've gone from t-shirts to nice shirts and suits, just like me.
Maybe, yeah, maybe. I think if you sit down with Goldman, you don't wear t-shirts. Yeah,
unless you've got enough in your bank account.
Is a hoodie or a shirt then?
Yeah.
Yeah,
It's also a statement.
I mean, if you are their client, then you wear what you want.
Hey,
Anyway.
Patrick, I'm curious what you think of this. Not necessarily. Don't even have to relate this to Lennart and Alex's case, but there's a note here that says they manage the company as co-CEOs. Do you see any disadvantage generally, or do you even work with other companies that have co-CEOs?
I might have one or two others where that is still the case, or it had been the case for a while. I have no strong opinions or strong experiences here. I know other investor friends who will have strong opinions either way. I don't, because my experience so far has been that it's entirely about the people and their dynamic with each other, right? And so to give you an idea, I also am neither opposed nor attracted to husband and wife founder relationships. Again, you will have people that have made great experiences with it. You will have investors that have made terrible experiences, and they will have strong opinions because of it. I don't, because I think it's all about the dynamic between the two people, which you know how it is. You don't really know what the problem is until you hit stress, until you hit adversity. That's when you figure out whether it's a problem or it's not a problem. But the problem is not what you call themselves. The problem is the dynamic that they have, and you truly only figure it out in times of adversity. So with Lennart and Alex, we also, we're investors for about 3 years now. You have hard times. And so these two had a wonderful dynamic so far that tells me it seems to be working.
Okay. So what about, so I guess, correct me if I'm wrong here, but 500 million, 550 million of debt, more or less?
Yeah, that could be about the right ballpark.
So that is to buy assets and to convert them, yeah?
Correct, to transform it, yep.
Yeah, so like this business is super interest rate sensitive. And how are they making money, or how will they be making money? Because if the interest rates are ticking in, you need to pay debt, right? I guess they're taking bank loans, etc. You need to keep paying this to banks as well, interest. So how much of the income is going to come from the real estate rental and then versus technology? If this can be measured, I'm sure it has to be measured because that's the business model.
Yeah. So I don't want to answer this in the specific case of Reneo, because this might be something that the founders are uncomfortable
Yes,
with
sure.
an investor sharing. But let me maybe paint the horizon of what you can do. So there have been and there have been iBuyer models, for example, where I wouldn't place it too far away from this one, because this Reneo in a sense is an iBuyer. An iBuyer is basically taking on debt, buying the asset, and then at some point in time, perhaps after managing it, realizing a spread on the price. And because debt was very cheap, you almost had no cost of debt of buying that, right? And so while the real estate prices were going up, you realized great spreads, etc. Was that ever really a tech company? I don't know. There were a bunch of these. So, but there could be a revenue stream there. The other end of the spectrum, you can realize for the debt investors software revenues, where you help them manage their assets better. In that case, you would be very little involved. The investors would still have another asset manager, or they would have an in-house function to asset manage, and they would use your software. And through that, you would have ARRs. And then somewhere in the middle are two other revenue streams that I have seen. One is you realize fees on the transformation. So basically, you are the cloud manufacturer, installer, etc., which is a tough model to make work unless you standardize radically and you think about the supply of it in a different way rather than a managed marketplace, which is about liquidity. And the fourth and second revenue stream here in the middle could be management fees. So basically something like an asset manager, which is an established model in the market. So you can also do something like that.
What I'm concerned, and the tricky question really here
Concerned?
is, yes.
Are you really?
Yes, because why not? The tricky question is, are they not raising this money to cover interest, perhaps, from the previous acquisitions? Because
that would not be possible, because they exist each in separate vehicles. So you can't cross over, do this. In order to do something like that, what you're describing, I think, by the way, is not a totally uncommon practice.
I know. That's what I'm asking.
Yeah. In this setup, it would never work, because each debt has its own vehicle. So you can't use the debt from the one vehicle to serve the other. That just legally would immediately blow up.
Yeah, because I think this is interesting business and difficult as well, because you need to be great in picking great assets that you can convert. And there's like lots of examples that people bought real estate and they just couldn't make it work even after converting for so many reasons. So,
Is there any dynamic here, Patrick, that if they're buying the asset and they're owning the asset, do you as investors have, maybe this is confidential, but do you get any investment into the assets that they own and operate?
No, because that's why I mentioned these are two separate companies, right? So my ownership and those of the other equity investors is in the technology company that earns its revenue from, which I'm not revealing what the revenue stream is, but of one of the four, or two of the four, or three of the four, or four of the four revenues, but the debt sits in separate pieces. And it's the same with fintechs, right? So fintechs, almost all of them, not all of them, but almost all of them will also have debt components. These debts are parked in separate vehicles, and they are not part of the software company in many cases. So this is very similar that way. And marketplaces, sometimes you see it similarly. So for example, Off Business in India would also be structured in similar ways.
So venture capitalists are known from wanting hundreds of X of returns on the equity or on the capital they invest.
Who doesn't, right?
Yeah. So how are you seeing 100xing your money, for example? Like, what is the outcome that Reneo provides to the European existing property market that allows for 10xing or 20xing the business, really?
Yeah, I think you have to believe in my opinion, one fundamental thing in order to see a very unexpected outcome here. And in my opinion, you have to believe that you will gain a structural cost advantage with which you can basically undercut every price offer in the market. So meaning you can offer more than others, but because you're transforming the asset with a super standardized and very well managed installation, building material, contractor setup, etc., that overall you bought the asset that you wanted and you transformed it for substantially lower costs than anyone else could do. And that way you can eat up the entire, if that's what you achieve to do, again, you have to believe in that, then you can eat up the entire market of prime assets. Prime not in the real estate sense of, hey, this is already a prime asset, but prime in the sense of these are the ideal targets across Europe. And then that way you could actually form a very valuable, well, for the debt providers portfolio and for the equity providers technology platform and cloud manufacturing nest type energetic transformation company.
I also see some similarity with like a REIT industry, real estate investment trust. Like when it was like in the 1960s, you couldn't, like in the US, for example, you couldn't invest in a building or in a real estate if you didn't buy it by yourself. There was only private market, right? Once the REIT industry emerged, then whoever had capital could invest in a REIT owning some assets. And right now, I guess there are REITs in Germany as well. But what we might see in the future is that like green REITs, REITs which will be, other investors will be only allowed to invest, or certain portion of capital will have to be invested into specific type of REIT, not just a REIT, but one which is converting existing properties and providing this green type of value. Yeah.
And the same concept exists. I mean, if you, we don't have to look that far back in history as well, right? So this existed for wind parks. It existed for solar parks, right? So the same concept. That's not the concept of Reneo. So Reneo is a company that is exceptional with the technology as well as a just very good operational excellence in transforming stranded or soon to be stranded assets and making them economically viable with structural cost advantages in how you transform. It just happens to do the acquisition for it because that is much, much simpler to facilitating the transformation. And it happens to then hold the asset as well. But that's not why they do it. They do it because they earn the money on the transformation.
Interesting, very interesting.
Or through the transformation, I should say.
Shall we go any more on this, or shall we speak about? Okay, you go for it then.
No. I just want to. I'm just curious. Like Patrick, is there anything that we have not exhausted on this?
What I liked about Alex and Leonard is that they are founders that are extremely detailed and granular, and yet at the same time. And because they were detailed and granular, they came with very unique and non-obvious convictions, like the one that I had mentioned. And man, anyone trying to convince them of something else, I wish them good luck. Yeah, that will be because they are firmly grounded in deep experience and a detailed understanding of a lot of moving parts of their business. And I appreciate this in them, as well as other successful founders in our portfolio a lot. And two, they are very good at relationship building and at presenting the company narrative and the company's execution in a way that is easy to digest and also easy to be passionate about. So they have these two capabilities that in my line of work, you don't see the two come together in a package. You oftentimes see one of them, but the combination of the two is actually something that Reneo benefits from.
And I don't know if you know or if you can share. If you can, great. If not, that's fine. The debt component. What's the interest and what's the how maturity comes?
I actually don't know that. I don't sit on the board.
Okay.
Christine Lagarde wants to decrease the interest rates or the lead interest rates by 100 basis points over the next 12 months. So
Easy.
Well,
while I agree with you, but let's be critical here for a moment as well, Martin, because I think you are. I know you are the journalist. Sorry, I have to say that, but rightly so. You're pointing this out. These businesses are sensitive to interest rates movements, and a lot of iBuyers, and Reneo had to navigate that as well, were almost caught naked in the wake of 2021 and leaving the ZIRP environment, zero interest rate policy environment. Now, Reneo was less sensitive, but it was less sensitive to it because the core business is something else. And now you might be benefiting from it, but at some point it will happen the opposite. I mean, overall, I can only tell people, read Ray Dalio. Read Ray Dalio's analysis of the big debt cycle. Your mind will be fucking blown. So eventually this will catch up to us. And but whatever. I'm not going to make this a debt discussion. So I just wanted to be fair here. You're right, Martin. These businesses are exposed in a way to the interest rate volatility.
Mm-hmm. Yes. Yeah, interesting. Yeah, read Ray Dalio. This the other book. When is it coming up?
Probably, I want to say a month or two, but Ray has actually published excerpts from each of the 16 chapters.
I think it is
already online.
Online, yeah. I've not read it, but I've listened to. Well, I've known him for 3 years now, via YouTube. Yeah,
send him this podcast.
Yeah, you'll definitely react.
Yeah.
All right.
Yeah, it will take you about 8 hours. I mean, it took me 8 hours to read all chapters that he published.
Mm-hmm. Wow.
Oh, he's very good.
Shall we touch on nodes and links quickly?
Okay. Touch on it.
Yes. Do you have it? Do you want me to share screen, Martin?
Yes, if you could.
Yeah, I got it prepared because I'm starting to know you very well.
Yeah. Nodes
and links. So this came out literally a few days before the news on Reneo. So they've raised $12 million Series B, as far as I understand, led by ETF partners, and deals with AI-powered schedule management designed to enhance product delivery across various industries, including construction, energy, aerospace, and defense. So, automates progress tracking, change control, trend analysis, and delay navigation. Identifying the request.
Very similar model to Nplan.
Yeah. Did you look at them, Patric?
At nodes and links? At I want to say previous to last round, maybe 3 years ago. I think it might have been called a seed or a pre-series A. I think it was a seed. Yeah, so Matt Gregg and his co-founder.
Because there's actually quite a lot of... I never personally appreciated this before, but hearing of this news and thinking of the other companies that existed in the space, there's quite a lot of tech companies that tackle scheduling as an area. And I always thought it was like, this is my construction experience. You just go on and put together a program for your project, and everyone looks at it and goes, "That's never going to work," but you will just accept it anyway because
I think what everyone is after is live update of scheduling, because then you know exactly at any point in the project, you know exactly how the timelines are contracting or expanding.
Now, when you say everyone, I wonder whether that everyone includes the scheduler.
I don't know.
Possibly.
So we are seeing, and I think you're right to point this out. So Nplan is also going after a similar opportunity, or the opportunity space, with a different model. So we have seen over the year, and sorry, full disclosure, with our very first fund from 2019, we're also shareholders in Alice Technology. So I will refrain from any comments on any kinds of companies here. Just, I want to just paint the space. So we have seen over the years 3 types of models, and they have evolved as we, saw the space mature, etc. So the first one is, let me briefly mention them and we can double click. The first model is full automation of scheduling, evolving perhaps into even real-time automation. First model. The second model is providing visibility on what's going on in your schedule, how it changes, providing analytics, providing dashboards for it. When I was talking to Greg and Christos, this was the direction that Nodes and Links wanted to get into. And then the third model is under the belief that it's a collaboration problem, that you need to foster better collaboration on the schedule. For example, in the US, Planera is a company that believes more in the collaboration. And then there's a second, let's say, layer to this. And the question is, do you go after big projects? Or do you, for example, infrastructure, capital projects, whatever? Or do you actually believe that perhaps small projects are more important to tackle? And then I'll give you a third layer, and then I'll shut up. The third layer is, do you go after the full schedule that you would do with Primavera P6, for example? The entire time, all the critical paths, etc. Or do you more do the week ahead schedule, which is more short-term coordination? Hey, when is the concrete crew showing up? Who needs the crane, etc. So these are like three different layers how we've seen companies think about the scheduling opportunity.
I think actually that there will be a winner at some point who will just combine three of them in one, and there will be nothing else, because obviously in the AI era, it's probably going to happen this way, that you will be able to predict everything based on obviously data you're providing. You will be able to predict things and schedule things.
Now that's an important qualification that you just made, though, based on the data you're providing.
Yeah. Yes. Yeah. So what's your adverse comment to that?
I don't have good insight in this, so I will leave this to better experts. And I heard you have Greg actually on from Nodes and Links. So I think this is something that he will be far more qualified than me to respond to. However, what I will say is that when I speak to customers, customer groups in my network about scheduling, the belief becomes stronger that, and these are the people who actually do scheduling, the belief becomes stronger that, hey, actually our schedules have never been particularly good. Our process of scheduling perhaps has been robust, perhaps the experience of the people doing the scheduling has been great. But in the end, we always only have an unoptimal schedule documented, because theoretically there's only one optimal schedule at any given point in time. So what you do is, statistically, you are extremely likely to only document an unoptimized schedule. So when you are now feeding this into a system to be trained, you'll have to deal with that, and you'll have to find ways how to make sense of that. That's just a consideration that these customers
that's a really interesting point. Great question for Greg when he comes on. Let me make a note quickly. You guys carry on.
Is this space, because I'm trying to figure it out, like, is this space a chase for software that will basically, because every participant is probably looking for the same outcome here. And what my question is it, I'm lacking the word here, but is this chase, how people can differentiate, let's say 2-3 years from now, how will they differentiate? Because feels to me that there should be a software just does it well.
Yeah, I know what you mean, yeah.
What's the differentiation between, because in the end of the day, if you are on construction side and you have a large project, you want to know what happened when, what happens when, and that's it.
It should be our arrogance probably of the subject,
which is fine.
Yeah.
But I don't know the answer, but I have a metaphor back for you guys. So if you're a soccer team and a soccer coach, or football team and a football head coach, and someone gives you the playbook from another team, someone says, hey, here's Pep Guardiola's entire playbook that has made him successful with Manchester City. But you don't have their teams, you don't have their infrastructure, you don't have their training facilities. Now you have the playbook. Do you think you will be having the same success as that?
No, definitely not.
Well, Owen might.
I mean, I don't know. Do you try it? But yeah, I get what you're saying. Yeah.
Yeah.
So
No, no.
I personally come more from the school of thought that when you just because you have a plan, just because you have a strategy, and just because you have something that works optimal in a specific instance, you actually have to copy all the ingredients, all the circumstances, the context, the resources, the constraints to be in the construction lingo in order to still make that plan optimal. Which means that if I have different constraints, different resources, machines, men, money, time, etc., the same plan will very, very likely actually not be optimal to my situation.
Yes.
So going back to your question, Martin, of course, that could mean that there is one standard software that can generate new plans. But I actually think it's more about the organizational practices, the structure of the organization, the model of the organization. And to give you a comparison, will an infrastructure company that is very differently set up, infrastructure construction company that's very differently set up compared to a Goldback, a vertically integrated systems builder that even has its own manufacturing of certain parts, should the two of them expect the same results just because they run the same software? I personally cannot see that.
Yeah, I don't know actually what's the answer to it.
Very
But let me drive you through, like, for example, engineering software, where the outcome is to design the structure. And if you use Nemetschek, if you use Trimble, or if you use Autodesk, you will get exactly the same results because it's science. Yeah, it's science. You can use different software, solve the same problem. It's going to be exactly the same result. And the result in this scenario is, I want to see my schedule. Yeah. So whichever software you run through this project, these processes, all of the documentation, it should give exactly the same outcome.
No,
At
but
one point in time with one set of constraints and resources in that specific point in time.
exactly. What happens when the weather is really bad, so you can't lay the bricks, and that knocks your whole schedule out?
Yeah. So, but that's like external environment, which needs to, which you probably would see some probabilities of occurring or not.
But that's where the management, that's where the infrastructure of your company, your business model, that's where all of those suddenly plays a role, how you actually react and how resilient your business is, which is why I'm saying, I think the schedule is irrelevant. The act of scheduling and then implementing that is way more relevant.
Yeah, but on the software component, I still believe there will be just one winner who does it the best and no one else.
But no, because
But if you're saying it's science, I mean, why would one do it best and the others?
Exactly.
True. I'm contradicting my engineering.
You are exactly. You're thinking like engineer Martin.
Yeah.
It's black or white.
Well, that's why I can talk to you guys. Part of it. That's why I can talk to you guys. So
there was a U.S. general. I forgot which it was, whether it was Patton or Eisenhower. Eisenhower was actually a field marshal. Anyway, so there was one of them. One of them said something to the effect of, it's not exactly verbatim, but something to the effect of, plans are useless, planning is indispensable. I think that's very similar here.
Yeah.
Any we have a few minutes. Any interesting stories this week?
Yeah, so maybe like $12 million, or what currency was it? As a lot?
Euro?
Is it a lot? $12 million is a lot? Series B? Like, what's your like general VC assessment on the funding?
Wow, this is very outside. And look, if you're burning 12 million, and by the way, I don't think they are doing that. I'm just contextualizing. If you're burning 12 million in a month, then no, it's not a lot. So it will depend on a lot of factors, but it's not a small round.
You said that you are an investor in Alice Technologies, which is optimize the risk or recover your construction project, which is pretty much the same play, right? Or similar.
Yes, but if you remember these three models, so Alice sits in the first model, and when I spoke with Greg was going after the second model.
Okay. Who is the winner? Obviously, you'll be biased.
Yeah, I mean, there are these three different layers to it. And right now, I actually do not think that you will have one winner that will eat all of these layers, because we will have to actually learn more and discover more what the ultimate bottleneck here is. And if it's collaboration, for example, and its collaboration in a week ahead context, Spectre in Germany has a thesis for that, Planera in the US also more in that space, then you might see that approach turning out to be the winner. If it's about, hey, another thesis could be schedulers are extremely experienced, and the schedulers in big projects, capital projects, etc., do nothing. I'm exaggerating, but do nothing but scheduling, and they are almost indispensable. But what when they retire? Well, then you will be forced to actually automate it. So in that sense, maybe someone from the first bucket that truly automates it, and it will get accepted all of a sudden that it's a black box. So I don't think I have enough information yet to know how it's going to play out.
Where Edify sits in the whole equation here?
They don't do scheduling, do they?
Yeah, I don't think they would currently be involved in this. They would be earlier.
Estimates, right?
Yeah, but I know their vision is to tackle pre-construction. But whether you could argue this is in pre-construction, it's like
part of the bid, yeah.
it's
But the
part of
thing
it,
is-
but
yeah, exactly.
it's not the only output. Whereas
Yeah.
estimating more so is only done in the initial phase.
Yeah, you'll have to ask Dustin.
I'm fascinated by the fact that I see it like years from now that you'll be able to budget your project perfectly in terms of the cost of labor and material, and there's like hundreds of millions of other factors which will impact the real cost of the project, like weather, infrastructure, whatever that will be. But I'm sure it's coming. Can see it coming.
Okay. I want to point out one thing that is super unobvious in this one. Actually, the most interesting piece of this press release is uncorrelated. And it's only mentioned as the third investor here, which most of the times is code for they wrote the third largest check, etc. Uncorrelated is the fund of Salil Deshpande. Salil is a acquaintance of my partner, and Salil is one of the most successful open source investors in the world. Extremely great at picking these companies. As far as I know, he's a solo GP with several hundreds of millions of AUM, which is crazy to think about. But that's because he's a fantastic investor. He has also interacted with a few of my companies. They had always a good experience. And my ears actually propped up when I saw his name here.
Very good. Okay. Can you guys Google Edify and see what's going on with this map on the right-hand side in Google?
This map.
Yeah.
Google?
Yeah.
Oh yeah, that's an interesting location.
We'll
Is that
leave
because it's
to-
now covering the Gulf of America?
Yeah.
Maybe they know something we don't.
Part of it, yes. Yeah.
Half of Canada, also nice. Yeah.
Oh, so much is happening in this American geopolitics these days. That's super interesting.
Yeah,
I don't
let's-
even have time now to talk all of it.
I'm
but-
going to say, let's not go down that rabbit hole, please.
Mm.
Okay, guys, shall we wrap up? All right, guys. Next week, I'll wear something to surprise you all.
Okay. Yeah, have a good evening.
And you.